Okay, so this is you are welcome here to this training. Is another time to learn. So this will be our last day of the training, and our life. This will be our last day of the training, and we have been putting everything together. So we'll be looking at chart patterns today. We have seen candlestick patterns. We have seen the market trends and all of those stuff. So today we will be looking at the chart patterns. So for the chart patterns, we have two categories. We have categories. We have the double bottoms, the trending patterns, and the ranging patterns. Okay, so like we all know that we have two type of market trends. That's the trending market and the ranging market. So today we'll be looking at the patterns that indicate a trending market and the ones that indicate a ranging market. So for the trending patterns, we have double bottoms, we have double tops, we have triple tops and bottoms, then we have head and shoulder pattern. That is those are the patterns for the trending market. Then for the ranging market, we have rectangle patterns and triangle patterns. So let's start with the uh, double bottoms. We start with the double bottoms. So for the double bottoms is the market is was we said that the market was in a downtrend and all of a sudden it went up, came down in the two and started going up. So this is a double bottom. So a double bottom is a bullish signal. That means the market will start buying when it is giving. Market will start buying when it is giving. So when you see a double bottom, what you should do ideally is to place a buy order. What you should do ideally when you see a double bottom is to place a buy order. Why? Because the market is reversing from a downtrend to an uptrend. It's changing from a downtrend to an uptrend. So let's look at some examples. Sorry about that. Let's look at some examples in the chart. Mm, this is the research that we do in forex market. You have to go through your chart. You have to. Okay, I've seen one. Um, though this one happened in the middle of an uptrend. Let me look for the one that happened from the beginning of the trend. Think down. I've actually seen one here. Okay. So I think no, this one is not. It's not. Let's look for other example. Okay, this one is. So you see that the market was actually coming down, and then it went up, came down, and it went like up. So when let's if you do a pip count, this is like this will give you a reasonable number of pip. Let's see from here to the first stop that is 81 pips. That is $800 for a lot size. Though it still went up again, but that was the beginning of the uptrend. So when you see a double bottom, what you do is to place a buy order. When you see a double bottom, what you do is to place a buy order. That is how it works. I want to look for another example. Let's let's see if we can get another example of the double bottom. This is the research in forex trading. Let me go to another pair and look for. Um, mm, don't to classify this as a double bottom. I've seen one. I think um, it's actually a double bottom. And the market gave, let's say this should be around 40 pips. Let's see, 20, 40 pips. It gave a oh 20, 30 pips. Gave 30 pips before it actually reversed. Okay, so that is that's it. Let's look for I want to look for a good example. I'm not seeing an example that is really double bottoming in my eyes. Sorry. So let me use a higher time frame. Let me use a higher time frame here. Um this is how we trade. We just go and be searching. This is just how it works. So it's not there's no feed that is everything's on a platter of gold. So if you're not ready to really dig and discover things, these are research. If you're not ready to make that research, you will not be proficient with it, like you will not be good. It's when you are able to do this that immediately it forms in the market, you are seeing it because these ones are previous charts. They are previous charts. So I'm not seeing here. I'll go to another pair. I'll go to another pair to see. Now everything I'm teaching you, it works for all days and all time frames. So if you see it, if you see it in one pair, you can actually see it in another pair and you are still good to go. You are still good to go. So okay, I've seen this one here. But I've seen some examples. So the market was coming down and it came down, went up, came down, and that is up, it went up again. So this was the double bottom that was formed. And when the double bottom was formed, market started going up. So like I said before, if you see a double bottom, that means market is going to buy. It's a buy signal. So what you do is to place your buy order and place your stop loss a little below the double bottom. That is how it works. So the next thing we'll be looking at is the double tops. That's the next thing we'll be looking at. So the double tops is now it says it's double now, two tops. So the market was in an uptrend. The market was in an uptrend. Sorry, please excuse me. Let me do something. Let me. Market was in an uptrend. Then it gave a high, came down, gave another high, and started dropping. So this is how it looks like the double tops. So when you see a double tops in the market, what you do is to place a sell order. When you see a double tops in the market, what you do is to place a sell order. It's as simple as that. So let me look for examples for us. Examples of a double this is a double bottom. This double bottom is very clean. First one went up, came down, and up it went. Um, let's see examples of the double tops now. Now for a double tops, you sell. This one is not double topping enough for me, but if you a double top, yeah. First touch, second touch, and market came down. Okay, so let me look for other double tops examples for that. This is a double top too. First top, market was coming up, gave a first move, came down, gave a second move, and that is where it started dropping from. Let's do a pip count for the first. For the first move, let's do a pip count. The first move, pip count is 360 pips. That is $3,600 for a standard lot size for the first move before I started giving pullbacks. That's so you see that forex trading is not something difficult. If you learn the ropes well enough, you will be very, very profitable. It's not saying double top bottom. Let me look for double top. So you are looking for double top, not double. So let's go. Okay, I've seen one here. So you have the first touch here. Although this is ideally the first touch, we have the second touch because it's the same, and the market came dropping down. So you place a sell order when a double top is given. You place a sell order. So the next thing we are going to be looking at is um the head and shoulders pattern. The head and shoulders pattern. So you have let me draw it out first before I do anything. Let me draw it out. I'm trying to go to the beginning. I think I can use this stick here. So the head and shoulder pattern is something like this. Market goes up, comes down, then goes up to give a higher high, comes down, gives a lower low, and it starts coming down. So these are the head and shoulder pattern. See, this is the first shoulder, this second shoulder, and this is the head. So when you see something like this, what you do, you know that the market will start coming down. So you place a sell order. When you see something like this, you place a sell, like you place a sell order. So that is how it works. So let's look for this pattern. I thought we see this one early enough. Head, shoulders, head and shoulders, head, shoulders, head and shoulders, head and shoulders. I'm going to the beginning of my chart. Let me look for another pair. I just want to see this one easily. Easily. I don't want to. Okay, I've seen it. Perfect. So this is our first touch. This is our first touch head. Sorry, shoulder, our first shoulder. This is another. This is the edge that is higher. Then you have the last touch. That is the shoulder, the last shoulder, and market comes running down. See, market comes running down. So if you are doing a pip count here, this is crazy. This one is really, really, really crazy. So this is like 100 pips. 100 pips is $1,000 for one standard lot size. So you see, it's beautiful. Let me know. Let me check if I'll see another example of the head and shoulders pattern. I can let's go to another page to look for it. Okay, this one here, yeah, it is. So yeah, we have the first shoulder, we have the head. The head was one there. Though this is far apart, but it's still the same thing. Then we have the last shoulder here, and market came running down, just came down, did a pullback and came down again. So you see how easy. If you can train your eyes. One thing is to train your eyes to master. You train your eyes to master the pair. You train your eyes to master the strategy. You can train your eye to master the strategy, you are good to go. You can be spotting these things easily. Just make sure that they are used to your eyes. Okay. So this is is the head and shoulders pattern. And when you get the head and shoulders pattern, what you do is to place sell, like you sell, place sell order. Okay. So there is the inverse head and shoulder. The inverse head and shoulder is like this. So market was coming down. In this case, it goes up, comes down to give a low, a sharp low, goes up again, comes down, and you have it up. So this is the shoulders, and this is the head. I believe you can. Sorry about that. Let me delete this one. It's not part of it. So you can see this like this. Your first shoulder, the head, and the last shoulder. This is the inverse head and shoulder because it's upside down. So when you see the one that is upside down, you place a by, is a by sigma. You place a by order. So let's look for examples here. Mm. This one was fun, but the market, okay, it actually took a long time, but is I just spotted this now. So you see the head, sorry, the first shoulder, you see the second shoulder, and the last shoulder. What am I saying? Your first shoulder, the head, and the second shoulder. And the market just went up from here. Market just went up. So you see how beautiful it is. Let me look for. I was seeing one, like I saw a lot of them when I was looking at this page. So let me show us examples here in this page. I saw a lot of them. I pray they are still here, sha, but if I can be patient enough to pick them out. Oh, okay. So we have this one here. This is your first shoulder. This is the head. This is the last shoulder, and market went up. So what you do is to place your the buy. This is for the buy. This is ready for the buy. This is ready for the buy. Okay, and mm, but I've given good examples here. I believe you understand what this one is like. What this is. So this is for the head and shoulders pattern. Actually, the how do I put it? The sharp patterns are not difficult to find. They are very, very easy. So that's why I'm moving fast because you see that we're getting our examples fast. So they are not difficult to find. So this is the head and shoulders pattern. So if you are not clear with anyone, you can actually drop your questions in the chat box. I will respond to them. Also, okay, so we have seen the double bottoms, double tops, head and shoulders. Then these ones are the rectangles. That is the ranging pattern. Uh, I actually missed something. I missed a pattern actually. This is the triple tops and the triple bottom. So the triple tops and bottom is like this. Let's start with triple tops first. So maybe market is going there up. The first touch comes down, second touch comes down, and you have your third touch, and market starts coming down. So it is like a brother to a double. It's a brother to double tops and double bottom actually. So let me. I just saw an example here. That's what I remember. I forgot before. Okay, okay. Although this one is looking like. Let me look for another example. This one is not really giving. The example is not giving enough. Let me. Let's look for another example. This head and shoulders pattern is big and wide. First shoulder, the head, then the second shoulder, and market dropped. Mm, this is a double top. Ah, I was seeing some triple tops. Let me go to it. Just if I'm not seeing one pattern in one pair, you don't have to be stuck there. You can go from that pair. That is, you don't have to be stuck there. Mm, Wow, this thing is taking me time to find, but I'll see. Let me search on the dark there. Let me look for it on that and see if I'll get. Okay, perfect. I've seen one. So you have. Let me expand my chart. You have your first touch, second touch, last touch, and market comes. Excuse me. A market just drops immediately. So this is a triple top. So it's the opposite for a triple bottom. So when you say a triple top in the market, you place a sell order. When you say a triple bottom in the market, you place a buy order. This is how it works. When you say a triple top, a buy, a sell order, triple bottom, a buy order. This is how it works. So that is for that. The next we'll be looking at it, they are the ranging patterns. I think this will be our shortest class because it is the end of the whole deal. Let me delete this stuff here. This things are just taking time. I don't know why I'm taking my time this much. But I think so. Let's just see the ranging patterns. Like I said, for the ranging market, whereby market goes back and forth between a given support. So we have, let me first of all, we have a support like this. So that is a resistance, this is a support. And market will just start doing something like this, up, down, up, down, up, and down. So this is a ranging market. So when you see like it's something like this is a rectangle pattern. This is a rectangle pattern actually. And for the rectangle pattern, for the ranging pattern, what you use to buy and sell within the support and the resistance zone. That is how to trade the ranging pattern. So if it is at a support, you place a buy order. When it gets to your resistance, you exit your buy, then you place a sell order. I've been doing this. I will show you some of my charts. So at a support, you place a buy. It gets to your resistance, you exit this buy order and you place a sell order at the resistance. Then for the triangle pattern, let me take this one out. For the triangle patterns, you have something like this. Like you have either a flat bottom and a slanted top, not straight. That is how the triangle pattern is. I will draw it better because this one, no, let me just do something better once and for all. Let me delete this one. I don't want to delete my, no. Let me go to another page instead. Okay, it's better that way. Okay, I'll do a screenshot. I was looking for a screenshot actually. So for this, for the triangle pattern, you have a slanted top and a flat bottom, or you can have a slanted bottom and a flat top. That is a flat resistance. These are for triangle pattern. Or you can have something like this and this. Sometimes they call this one megaphone pattern. They're all Broadway formation, but I just call all of them triangle because you know there are different kinds of triangle. So it just moves back and forth the resistance and the support, back and forth to resistance. So these are the triangle pattern works for all of them. So at a support you buy, so it's going up, place a buy order. When it gets to a resistance, you exit your buy. I place a sell order coming down. When it gets to the support, just like that, this is how you trade the ranging pattern, forth, back and forth, buying and selling. Sometimes you can place the trade like 3, 4 times in a day and you are good. So let's do this one. For this, we buy, sell, buy, sell, buy, and until the market breaks above or below it. So earlier on, I've actually told you people that there is no market that is forever. If it is in a downtrend becomes uptrend. Uptrend becomes downtrend because the market cannot trend forever. So until it breaks above or below this pattern, you just keep trading back and forth. So let's look for some examples of this pattern. I think I saw something like this in uh, Euro USD. Let me go to Euro. Okay, let me see. Okay, this is a triangle pattern first of all. Sorry, it's a rectangle pattern, not a triangle pattern. So market started here, it went up. I didn't catch this pattern on time. That's one crazy thing about 20%. We don't know. The market will just be going back and forth and be like, what is going on? So it was when I caught the pattern that I started trading. That's when you see the signals I give. So when it got here, I was like, this thing, it gave this bearish engulfing and we took a sell here. Then I marked this. This was like earlier, okay, last week. This was last week. Then I marked this support here. Then as it was going up, I still didn't know on time. Then I took from year to year. I placed a buy order. When it got here, it was this one I really caught very well. I took a sell order for the bit down. You get, then it has gone up again, and to some extent it's trying to come down. This is today. You see, it got to this resistance. It got to this resistance. Let me extend it now because I actually drew this pattern when it was here. It got to this resistance and see that it's trying to come down. You can see how it is now. So this is a ranging pattern. Let me see. Let me take it. I think I can. Let me reduce the chart. See this clearly. That's in forest. You have to train your eyes to see. If you don't have eyes that can see, you will not make profit in trading. So you need to have eyes that can see and see well. I think I'm seeing a pattern that is forming here, though it's not confirmed until market opens on Monday, because market closes today. These are the forex market work. So let me connect these two. I've seen this. This is how to spot this pattern. I connected those two. Then let me connect the bottom. Wow. This is let me connect the bottom like this. So you will see this is a triangle pattern that's formed here now. So by this, I'm expecting this to drop down, then go up again. You get, this is a triangle pattern. I'm just seeing it now. I never knew this guy was doing this. I just saw it. And that is one thing about this pattern. You will not see it on time. But if you're able to catch it, it's very, very profitable because it gives you know exactly when to enter the market and when to exit the market. That is one thing about this ranging pattern. So I'll see, I'm still on another pattern here. Just connect the highs and the lows. This is how it works. So nothing difficult. Then the bottom part, mm, okay, cash here. I actually didn't know this. I'm just, my eyes just open. Let me just put it that way. My eyes just became open and I'm seeing this now. So this is a triangle pattern. So from here you place sell. When it gets here, you place a buy order. When it gets here, you place a sell order. It goes up, you place a buy order. It's coming down, follow it down until it breaks above or below the trend. This is how ranging patterns are. I think I'll go to another. Let me go to another page to look for ranging patterns. Okay. You just have to have eyes that see. You can have eyes that see. You are good to go. Wow. Hi. Today is Friday. would have taken this trade now, but it will it's not wise. It's not my best interest to place a trade now. That is not how trading works. But I think I've seen something here. Yeah, cash you. It's not wise to take trades by this time of the day or decide when it's Friday because it's weekend. So you'll be charged swap fee over the weekend. So I'm not taking the trade, though I'm seeing the opportunity. So beautiful. So let's do the bottom first. Here we are, two connected lines. Yes. Then the top, I think this would be uh that's nice. A rectangle bar would be good for this guy. Yes. So here we are. So this is the ranging pattern. Like this is a triangle pattern actually. So here is it. So I'm expecting this market now. So some extent, this is an analysis I'm doing for next week. I'm teaching analysis first time. I'm doing analysis for next week, and I'm just I'm just glad that I had it because I would have been able to spot this. So you see that the market is coming down now. So when market opens, I will I may take this trade and follow it down, then take it and follow it up because it's ranging, going back and forth, going back and forth. You see this. So I think it was a ranging pattern I saw today that made me take the trade I took. Yeah, this pair, look at it. I actually did well with this trade today. I took it today. I've already marked my chart, so I just wanted to show us this. You see that the market was just ranging between this zone. I saw it early this morning and I took a sell here. Although I didn't follow it to this place, I returned my trade here at this point. So I'm no longer in this trade because it's Friday. We need to close market and go. We need to close our shop and go. So I took it here when the market gave this bearish doji. Market gave this bearish doji here in the morning. Then I entered, and when it came down to this place, I exited the market. This one, this is a ranging pattern. There's another one I took, this USDCHF. This one did hit. I took this one last night, like yesterday evening, when I saw this bearish star pattern that was from. Mark you, this is actually a ranging pattern too. Let me go to a higher time frame. Look at it. The thing is ranging. You see how beautiful this thing is. It's very fine, clean range like this. So I actually did not know about it's not okay. Let me just shift this thing. In forex trading, it's not every move that you will catch. So don't beat yourself and be like, this thing be like this, and I did not take the trade. No, it is not every move that you will catch. It's not everything that you will trade. That you will miss some moves, and it's okay to miss moves. Just know that it's not everything you catch. So I really did not know about this trend until last night, like yesterday evening after our class. That's when I saw this. I said, this thing has been mentioned. And I took a sell. I exited the trade this morning. I actually took a sell when I saw this bearish star pattern that was here. I took a sell, and it was a beautiful sell. Actually, I did not hold it to this point. Let me be truthful. I exited my market here, like this place. This was when I exited. When he gave this pullback, I just exited because from here to here has given me good money already. So it came all the way down. Okay. So I believe I've been able to chip in some stuff. It's not even move that you catch. This is all for the patterns, the ranging patterns and the um, trendy patterns. You will not catch every move. That is true concerning the forex market. It's not everything that you trade. You must not trade everything in the forex market. Okay, so you should know that. Now, you want to know this that trading is a business. It's not gambling. Okay, so you don't have to trade as if you're a gambler. You calculate your risks. Do what is called calculated. Take what is called calculated risk. Calculate how much you are willing to risk in a particular trade. Because the truth is that it is a business and every business has risks. every business have risks. That's the truth. So if you factor in the risk part of it, you'll be profitable in trading. That's why sometimes I can take a loss. I actually trade with my phone. That's where my MetaTrader app is, my trading app is. So this is for analysis. I would have shown you my trade for this week, and you would have seen that I took some losses, but just that my profit outweighs the loss. So that is how trading is. You should be able to trade in a way that your profit outweighs your losses. Your profit outweighs your losses. Okay, and you don't um, you do not have to be like, oh, I lost this trade, though. How am I going to do this? No. If you lose a trade, you have a thousand opportunity to recover what you lost. Okay, so do not in any way feel like I lost the trade. That is not how trading works. It's a business. I believe we have read if you have not read Femi Otedolas book, you have seen it where he was just owing banks a lot of money and he's still alive and he's still successful. You get. So do not borrow. This is I'm actually dealing now with trading psychology. If you can get your technical analysis right, your trading psychology right, you'll be a very, very profitable trader. No jokes. I'm not joking here. If you get your trading psychology right and your this thing right, your technical analysis right, you'll be very good at trading. And I think by God's grace, I've been able to master those two. So I know this. I calculate my risks very well. Very well. I don't just trade anyhow. I did not come here to gamble. I came here to make money. And money was not made, okay? Money must be made. So that is for risk management, trading psychology. Trading psychology has to do with your mental and your psychological position when you are trading. That's the emotional and mental position. Some persons that can be so overjoyed with profits that they start making losses. And they can be so fearful that they start making losses. So you have to keep a same attitude, whether in profit or at a loss when you are trading. The attitude has to be the same. It's not because you make profit, you want to make more profit, then you start losing the money that you have made. It's what it happens. Some persons that made $1,000, instead of them to rest, they'll still be placing trade. Let me make fun, let me make fun. And in trying to make more money, they'll lose what they have already made. But some persons have already made a loss. Instead of them to just stress, like calculate what did I do wrong that made me lose the trade. They like to take back what the market took for them. That's called revenge trading. And revenge trading does not always end well. If you take a loss, go back and analyze. What did I do wrong? What happened? Did I miss my analysis or I was disappointed? It's okay if you haven't supported, it's fine. But if it is not the case, that you are not disappointed, your analysis was wrong, you go back and reanalyze. So I'm tempted right now to take this trade. Let me not fall into temptation. Okay. This trade is very beautiful and to go well. This is a signal. Let me I'm so tempted, but today is Friday and it's weekend. From this signal, this thing we actually is going to, from what I'm seeing here, according to this analysis, this thing should buy. Let me just mark it out. Now, this thing should buy. I'm expecting this thing to go. This is like a 20, let's see. Okay, I cannot hold this trade over the weekend. This is not sound out. Let's just leave it. Then okay, so as I was saying before I saw this guy here. So do not trade like so do not trade in a way to revenge the market. The market made you lose money. It's not the market that made you lose money. Maybe your analysis was wrong, but your psychology was wrong. That's why you lost money. So go back, reanalyze, come back, see what you did wrong, and you are good to go. Okay? Do not borrow money to trade, please. If you know you don't have money to trade, do have raise your capital. Don't go and say, give me this money, meet your friend, just give me $1,000 At the end of the month, I'll pay you back. You know what that does? It puts you under pressure. And if you're under pressure, when you are trading, I bet you lose your money because you're under pressure. So you think you are thinking straight. So it's a lie. You are not thinking straight. You are not thinking straight. So do not borrow money to trade. Do not use funds for important like um some persons say I'm getting married in December. Let me use this money to trade so that I'll make more money. So that in December I will shut down everywhere. You have a 90% probability of losing that money. Please do not use money that you have stacked up for something important. Some persons have used their school fees to trade, and the pressure makes them to lose that money. Some persons have used their rent to trade, and the pressure makes them to lose that money. It's not the market that is doing you. You are the one doing yourself. Okay, so please and please trade like a business person. Don't the business is not trading is not gamble. So for business, you have your trading plan. What am I going to do? How many lot size am I going to be trading with my account? How many lot size will I trade? How many trades am I going to be taking in a day? What is my stop loss? What will my stop loss be like? What will my take profit be like? So these are questions you need to ask yourself so that you do not go and do like you just over leverage or use irregular stop losses and you'll be taken out of the market to get. So I believe this is cool. We have learned a lot this whole week from the first day until now. So I have an opportunity for us for free. If you want to be trading, I can be giving you trading signals. Just come to my DM. You can actually create an account using this link, like a trading account, and you'll be trading with my people. I'm not charging you. It's not. You have to create a correct account first, fund it, then we are good to go. That is just it. So it's still free. And if you don't want to, you can still reach out to me to help you and guide you through creating an account. Then um, if you want to start trading, you can still you can reach out to me and we have learned everything. I can put you through some stuff and at no extra cost. There is no, I don't do, if I want to charge, I will charge, but um, I'm just doing it for the group. So it's still free. You can reach out to me or DM, in my DM, sorry, on WhatsApp. All of us are in the group. So you can reach out to me in my DM and I'll put you through the process of starting out to trade. But know that your funds need to be ready to trade. It's not me that will give you funds to trade. Okay, so that would be all for now. Um, See, whenever we meet, this is the last day of our training. I believe we have learned a lot. I am still Sarah Abamba. Take care. Bye.